This is the Net Group Investments podcast, where we explore a variety of views and insights that investors care about. Hello, I'm Demisha Greater from Net Group Investments Multi-Management. This installment of your market and economic wrap is titled SA Inc. on a High, as euphoria sets in over the establishment of a government of national unity. South Africa is said to be witnessing a historic moment with the establishment of a government of national unity. This has sparked a wave of optimism across the nation. The Johannesburg Stock Exchange is ablaze with activity. In yesterday's trading session, the local bourse climbed 3.5%, reflecting the buoyant mood as SA Inc. stocks surged. The last time the JSE jumped by more than 3% on a single day was back in November 2022. Retailers Truworths and Foschini were both up over 9% on the day, while financials Sanlam and FirstRand were more than 8% firmer. The Unity Government Accord prioritizes growing the economy among its 11 focus areas for the incoming administration. It touts fixed capital investment, structural reforms, and fiscal sustainability as key objectives. In a recent note, S&P Global Ratings confirmed that the election outcome is broadly favorable for the economic and fiscal outlook when compared with the alternative. However, the ratings agency also conceded that they expect the government will face an uphill battle to revive growth and maintain fiscal discipline while navigating the new realities of coalition politics. Ahead of President-elect Cyril Ramaphosa's inauguration today, the Rand has continued to stand tall, strengthening all the way to 18 Rand and 4 cents against the US dollar in yesterday's session. The president's re-election comes after the ANC, DA, Patriotic Alliance, IFP and Good agreed to join the government of national unity, which has 273 seats in the National Assembly, or 68%. The last time when Cyril Ramaphosa took over as president of South Africa, we saw an approximate 4% jump. This was on the 15th of February in 2018. Now, with the local currency currently around the 18 Rand 10 against the US dollar mark, this could be signaling that there is money flowing in, and perhaps we could start seeing some net foreign buying for the first time in many years. In addition, we have also seen massive moves in our government bonds, where bond prices have firmed since early this month. Global politics have also taken up many headlines, as evidenced in Europe, where stocks came under pressure last week on concerns over upcoming elections amid a rise in the support of far-right parties. Meanwhile, tension between China and the rest of the world continues to simmer. The European Commission announced it will impose up to 38% in additional duties. This is on top of the current 10% duty on imported Chinese electric vehicles. This is effective from next month. This, of course, risks retaliation from Beijing. This follows on from Washington's recent plan to quadruple tariffs on Chinese EVs to 100%. Now, according to the Bureau of Economic Research, or BER, Chinese EVs now hold 8% of the EU market. Now, this is up from 1% in 2019, and this is expected to reach 15% by 2025, with prices 20% lower than EU-made models. This move has caused shares of major European car makers who depend on the Chinese market to fall due to fears of possible Chinese retaliation. Monetary policy has also continued to move equity markets. In the US, stock markets rallied over the release of a cooler than expected US CPI report last week. This even after the US Fed's more hawkish summary of economic projections that was released on Wednesday. Yesterday's trading session saw the S&P 500 rise to a fresh record as the artificial intelligence darling NVIDIA continued its march to new highs, topping Microsoft as the most valuable public company. Now, the chip maker has surged by more than 170% since the start of the year. as enthusiasm for artificial intelligence shows no signs of abating. Looking ahead to what we can expect on the economic calendar this week, locally, consumer inflation for May and retail sales for April are both due today. On the global front, investors are looking ahead to the Bank of England's policy rate decision on Thursday. We've come to the end of our note. Until next time, do take care from the multi-management team. Nedgroup Collective Investments is an authorized collective investments scheme manager in terms of the Collective Investments Schemes Control Act. Nedgroup Investments does not provide advice on financial products and will only give you factual information. For further details on our funds and to view our terms and conditions, please visit nedgroupinvestments.co.za. Nedgroup Investments, see money differently.